Today on the final bar, market rallying pretty impressively, leadership coming from energy, which has been one of the areas that, it's sort of been hit or miss. It's been up or it's been down. It's sort of been at the top or the bottom, certainly bubbling to the top today. A lot of the traditional defense down at the bottom, real estate and utilities the weakest. Both the consumer sectors down at the bottom of the list. We are here at the Las Vegas Traders Expo. We're going to share an interview with Michele Schneider from earlier today, which was really, really helpful. So lots to unpack, also screening for some new ideas. So ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to today's edition of The Final Bar. This is your host, Dave Keller. I'm the Chief Market Strategist at StockCharts.com, usually coming to you live from Redmond, Washington. Today, we are actually coming to you from Las Vegas. We're here at the Las Vegas Traders Expo, Thursday, Friday of this week. I'm speaking tomorrow night to all the attendees here, also online, but having some really cool conversations. We spoke with Michele Schneider earlier today. We're going to share part of that conversation, talking about a market outlook and some of the presentations she'll be doing here later today and tomorrow. We're going to sit down with a number of people over the next couple days. So if you're not aware of it already, or if you are looking for something to do over the next couple days, check out the Las Vegas Traders Expo. There's a website on the screen that'll give you information that you can find it. If you can get to Las Vegas, it's a really cool event. Lots of good exhibitors, lots of good speakers and panelists. But if you can't get here, you can actually do it online as well. So check out the streaming options and see what sort of market wisdom and tools you can pick up over the next couple days. So, a lot of market resilience. We continue to talk about the market going to new highs. Today, no exception, trading highs, closing highs after the rally into the close yesterday. So continued strength. Again, it's all about where we're seeing the strength and weakness and what sort of leadership that we're seeing. And a lot of the skepticism people have had on this rally has been where the leadership has come from. And one of the challenges is, defense leading the way up. So you have things like utilities, real estate being strong, some of the traditional offense like technology, consumer sort of lagging behind. So what are we seeing today? Well, we're seeing a bit of a follow through from energy. This, sounds impressive, but if you look at the chart, it's not great. That's where, to be honest, don't get too caught up in day-to-day leadership. What's moving up the most today? Energy's up the most today, but clearly not in a real position of strength, right? It's still below the 200-day moving average, following a similar pattern to some of the corrective movements that we've seen a number of times so far this year. So something like energy leading today, but really not getting above previous highs even from the last couple days. Technology may be looking a little different, right? So this is a sector that's actually at new trading highs, new price highs. So while energy is number one today, something like technology, or I would argue financials, which is the third best today, tech and financials, you can really see where that's the strength in the market right now. Tech, not surprising. Financials, certainly a different vibe than what we've gotten in recent months, right? The XLF, we've looked at that 2-year chart of the XLF a number of times. This resistance level around 2850 was significant. We've now broken above that, retested that, and continue to leg higher. So the XLF to new relative highs for the last 6 months, even the last 8 months, which is pretty impressive. Overbought on the XLF, nearing the extremely overbought reading, and I think that's one of the key charts to be watching right now. If the XLF gets above 80, that's sort of the general line in the sand for an extreme overbought condition. And what that usually means is the momentum has been so strong going higher, you'd expect a little bit of a pullback, but overall the momentum is so strong that you'd expect at least one more push further to the upside. So energy, tech, financials really leading the way higher today, followed by communication services. At the bottom of the list, we have the traditional defense, utilities, and real estate. We looked at a chart of utilities yesterday, and again, what concerns me about the chart of utilities is that we're rolling lower, going to new lows, really pushing down through support, new relative lows again today. So we have this rotation away from utilities and real estate, breaking below the 50-day, breaking below the previous swing lows. That's a very different feel than what we've gotten from utilities and real estate. And that's, again, adjusted data incorporating a lot of the dividends so that, even with that included, it's still showing some relative weakness. What's really interesting to me today in terms of themes to pick out, number one is both the consumer sectors on the weaker side. So a lot of times we've had one up at the top, one up at the bottom, and that's why that consumer discretionary to staples ratio that we looked at in pretty good detail yesterday, that's why that's been such an interesting one. They're actually moving in lockstep, both of them weaker, down a little more than 1/4% today, but both the XLY and XLP rotating down. So really a rotation away from both the consumer sectors and really driving into tech and financials that are, really in a position of strength overall. Let's look at the rest of the market leadership and just sort of understand on the market summary page what sort of themes we can come out with. So out of all the major indexes in the U.S. and Canada, the Dow Industrial is actually #1. So really the blue chippy sort of names, the mega caps are what are driving things higher. And I can only assume with something like that, it's going to be the banks and the big tech companies that are going to drive that. That's why those sectors are doing so well. Transports are actually notably outperforming the S&P today too. And again, we're recording this a little earlier in the day on Thursday because a lot of the interviews we're going to be doing. So we'll have to see how things close out for the day. But overall, by mid-afternoon, sort of 2 o'clock Eastern, that's sort of what we're seeing, which is really noteworthy. And the NASDAQ 100 also outperforming the S&P. At the bottom, it's the Dow Utilities, right? Also the Value Line Index. And what's interesting when you think about something like small caps, the concern that we've had for a number of weeks now, and if not a number of months, is mega caps leading, especially on the big up days, and lagging. We see small caps and mid caps. That's sort of what's playing out today, right? So the OEX up 0.6%, small caps 0.4%, mid caps 0.2%, right? So you have this situation where you have the largest names, the big names are what are really driving things higher. Some of the smaller names, again, the higher beta names that you would expect to really be leadership, aren't really playing out. So I think that's a potential area of concern. Again, all of that does not matter as much as the fact that the market continues to close higher. And we can speculate a lot about weakening breadth, stronger breadth, participation of small caps. Arthur Hill's pointed out in his blogs on StockCharts a number of times over the last couple of months. It really doesn't matter, right? As much as we can talk about whether or not small caps are participating, that doesn't matter as much of the fact that the market just keeps going higher. And the reasons why, the themes that are driving that often look really, really clear in the rearview mirror. It's really hard to, make assumptions based on what we're seeing real time. You might have noticed communication services, one of the stronger names. Or stronger sectors. I thought it'd be important to point out Discovery. This is DISCA. It's one of the big entertainment stocks. Gapping higher and have real follow through to the upside today, really gapping above the 50 and now the 200-day moving average is what we've eclipsed today, becoming overbought, new relative strength high for the last couple months. So an interesting change in a stock that had not necessarily been one of the stronger names. We talked about materials a little bit yesterday, and I thought it was interesting to note one of the strongest stocks in terms of an improvement in the scooter rankings was FCX. This is Freeport-McMoRan, one of the big materials names, also above its 200-day for the first time, which is actually really meaningful, above the 200-day for the first time in a number of months. That's quite the rotation. Now a series of higher highs, higher lows, back above the 200 days. So we talked about how to think about materials, and certainly follow through to the upside today for Freeport-McMoRan, one of the bigger names that we would pay attention to. So that's our market recap for today. And again, leading into the close, we'll have to see how there are any dramatic changes, but overall, certainly a stronger follow-through day for U.S. stocks. This next segment is called Fishing for Alpha. This is a new segment we wanted to introduce. Talked a lot with Chip Anderson, Grayson Rose, the management team at StockCharts about our scanning engine. We have a lot of really cool ideas for how to improve that, how to think about that over time. But I did want to, at times, just sort of, look at some example scans and think about how to apply them. So if you're not familiar with scans, boy, take a look at Chip Anderson's weekend shows. He does a couple shows. One of them is a deep dive show. He did a really good one recently on the scanning engine. So if you're not familiar with what I'm showing, make sure you look at that. But on your dashboard page, you're going to have a section on scans. You can create a new scan here at the top. I'm actually going to look at one of my saved scans. I'm going to look at weekly MACD buys. So one of the, and this actually came from one of the questions recently, thanks for this, someone was asking about the scanning engine, just examples of good scans to run. So I just want to share with you over time some of the ones that I like. And this one is actually looking at the weekly MACD indicator. Weekly PPO is very, very similar to this. Weekly MACD is one of the indicators I've used for years as a way to make sure you're on the right side of the cyclical trend. So if you look at the weekly MACD on a stock or on a broad market index, it's going to show you that cyclical trend. It's sort of meant to capture the next month or two of a trend reversal. It identifies when the trend has reversed. So if you are owning stocks that have weekly MACD sell signals, you really want to start to rethink that positioning and think if it's time to maybe take something off the table. Again, if you're not in stocks that are starting to show weekly MACD buys, it's a great opportunity to revisit it and think, is there something going on in this chart that should confirm that, should I be thinking about this more on the long side? This scan is actually pretty straightforward. You actually just use the language of the scanning engine. So I'm looking at S&P 500 members. You could easily adapt this to whatever you'd want to. And I'm basically using this big statement just to show that the weekly MACD line has recently crossed above the weekly MACD signal line. And that's really the main thing you're looking for, is when the MACD line crosses up or down through the signal line. So very quickly translating this to English, it's telling you the weekly MACD today is above what it was yesterday, above the signal line. But if I look at the last couple days, the MACD line was below the signal line. So it's been below for the last couple days, and then in the last day, it's actually rotated and broken above. And I'm just looking at the intraday data. You could look at this on a closing basis. When you run the scan here, I'm going to get a list of results, and it's not many. And again, this is just looking at the S&P, so it's a pretty small universe, just to make sure it's names that we know. You could look in the mid cap, small cap space, other indexes, bigger indexes, to get more detail, but it's only 10 to 12 names that I'm seeing right now, all sort of large cap names, and I'm going to sort them by sector just to see where they all sort of line out, and that's the order of the charts that we're going to look at. What's interesting is Discovery, which we just looked at a moment ago in our market recap, is the only communication services name. That's where we're going to start here. So this is now a list of those results. When you export the scan, I just like to do it based on grouping it by sector. I like to sort the list that way just because I like to group similar names together. And then I like to go through the charts 10 per page. It's the way that on some pages it'll say view all, others it'll say 10 per page. It's a great way to just go one by one through each of the charts. And here, this is sort of my standard weekly chart with the weekly bars, the 40 and 150 week moving averages, the weekly RSI, and then the weekly MACD at the bottom. And if you use the PPO, really similar, so the interpretation is pretty much the same. So just looking at some of these names here, again, this is trying to identify when trends have reversed higher. So the first question you should ask yourself is this on your radar? The second question is, if it's not on your radar yet, should it be now? Is this signal telling you enough of an increase in an uptrend, enough of a momentum shift? Because these are things that are probably have been weaker and are now rotating more strongly. And then the third thing is to look not just at the weekly chart, but look at the daily chart and see tactically when you might want to scale in or out of a position. That's sort of the general way I would approach it. So Discovery, again, this is a big up day, up almost 13% in the middle of the day on Thursday, but a nice rally back above the 40-week moving average, which is similar to the 200-day. Now going to be testing this trend line, which on the daily chart becomes a lot more clear. But here's the weekly buy signal that we're just getting from the MACD indicator. I should make a point. I am running this in the middle of the week, so this list could change tomorrow once you get to the weekly closes. So do keep that in mind if you're looking at during the week, you're using a live bar that could be changing. Then we get into some energy names, and I find it really interesting when you're finding energy stocks, a sector that's essentially been out of favor, starting to improve, starting to show signs of strength. So EOG is one of the E&P names, exploration and production names. It's really been beaten down. This is not traditionally the type of chart I tend to like. I tend to like things that are more strong, but it's interesting to note that this is a stock that's up over 5% today, starting to rotate higher. So what concerns me, it's a similar pattern to what we've seen during this downtrend, but certainly a MACD that's lower and starting to get a buy signal. So I'd want to see some follow through, maybe an establishment of a higher low on a name like that. ExxonMobil, the largest stock in energy, also registering a buy signal. This is a stock that's up a good amount, and again, energy in the number one sector midday today, early afternoon. But you can see this buy signal from MACD, which is similar to what we had coming out of the market lows early 2019. also coming in the spring of 2018. Both of those led to sustained rises in ExxonMobil. So certainly a chart that I'll be watching. Some financial stocks and a lot of the banks are actually up closer to this sort of pattern where they've confirmed an uptrend, breaking above these really long-term bases. But I think it's interesting to see an asset manager like Franklin Resources registering on the buy signal. So this is a stock that's now established a higher low at the beginning of October, breaking, trying to test resistance. 30 is really the line in the sand. I'd want to see it eclipse. But here's the buy signal from MACD. And again, the fact that it's been so beaten down and starting to show signs of strength coming out of a support level is kind of interesting to me. E-Trade Financial, ETFC, is another stock that's come out of this more in the brokerage space. But if I'm looking at a trend line connecting the highs from 2018, 2019, we're right at that point where we're starting to test that resistance. So I'd be looking for that. Also looking for the stock to get above the 200-day moving average for 40-week moving average there. Also some healthcare names. And I would say with healthcare, it wasn't a sector we talked about because it's right in the middle of the range. And it's sort of been a non-factor for a lot of people. I think we've sort of mentally forgotten about healthcare because it's not really been leadership or laggage. It's kind of been met in the middle. So a stock like Anthem that actually starts to register with a buy signal, that's where some of these screens across sectors can be really, really helpful. So that's the weekly MACD screen that I like to run. Again, I like to run it during the week, especially over the weekend or after the close on Friday, because then you get a locked in closing price that you can pay attention to. So that is our segment today on fishing for alpha, using the scanning engine to find some names you might not be looking at already. We're going to take a quick commercial break here. We'll come back with my conversation with Michele Schneider. See you in a minute.
The Chartwatchers newsletter features expert technical commentary about the current market from some of the industry's leading technical analysts. See what's really happening in the markets through their eyes and gain an edge in your own investing. The newsletter is packed full of insightful and educational articles intended to help you become a better investor. Whether you are brand new to charting or a seasoned technical analyst, each edition will provide a wealth of informative content. It's the best way to stay informed on all the latest news, events, updates, and additions here at StockCharts.com. Whether it's a new feature or blog, an upcoming conference, or a special sale, you'll hear it first in the Chartwatchers newsletter.
So we're sitting down with Michele Schneider, going by Mish. Such a pleasure to meet you. Such a pleasure to sit down with you. Thanks for joining us.
Thank you, Dave, for having me. What a pleasure it is for me, too.
Yeah, so you're the Director of Trading Education at MarketGauge. Would love to hear about that. But first off, I know you're presenting a number of times, today and then tomorrow, and we're at a situation with the market with, market going to new highs, a lot of questions about leadership and laggership. What are you seeing right now at a top level? How are you thinking about the current environment?
Well, as traders, our responsibility is not really to question with all of the rhetoric that goes on about why this is the most hated bull market ever. Ours is actually to follow the trend and try to make money off of it, but be smart enough to know that things can change very quickly. Considering the fact that this is such a bizarre market right now, as you said, we do have new highs, but only in several indices and in several sectors. For example, semiconductors just gapped up this week on a runaway gap and is following through. The S&P 500 new highs, the Dow new highs, NASDAQ new highs, the Russell 2000, not so much. And that makes you wonder, because the Russell 2000 really does represent the manufacturing mainly in the United States, so it's a real economic barometer. Those 2,000 small caps, all of which are produced in the United States, why are they lagging? That's a question, and it's a legitimate question.
Yeah. When you think about talking about market leadership, one of the critiques that people have had about the recent bull market is defensive leadership. So things like utilities, real estate, consistently being at the top of the list in terms of sector performance. In the last couple of weeks, we've seen a bit of a rotation, right? With utilities, real estate starting to roll over, something like financials breaking to new highs. Is that enough of a rotation or a change to make you feel better about the market going to new highs, or is it not enough to really question that leadership rotation of sorts?
Well, I prefer to see what we call the inside of the market participating as well. So, for example, transportation sector. It's being dragged up, but it is definitely nowhere near as well as performing as well as what we're seeing, say, in semiconductors.
Sure.
Brick and mortar retail, which is 70% of the gross domestic product, being dragged up. The regional banks, which is different than the actual big banks,
sure,
they're also being dragged up. And so, and the Russell 2000 being dragged up. So when you look at that situation, I would definitely want to follow where the money has been rotating to, and we have, as traders, done that.
Yep.
But at the same time, I think you have to be really smart and have profit targets pegged and move up stops and not get too complacent.
Right. And so overall, pretty skeptical, a little cautious about the market going to new highs right now. It sounds like, based on some of the internal weakness. Is there something that you would see that would give you like an all clear of sorts? Is there some signal or some movement or some specific part of the market? Is it small caps starting to maybe outperform, or is there one thing that you would be looking for here?
Absolutely. I would want to see those sectors that I just mentioned and the Russell 2000 start really playing catch up and taking more of a leadership role.
Right.
I mean, when you think about that happening, you imagine where is S&P at that point? Because it's already in nosebleed territory.
That's right.
But those are the signs that I'm watching for, is if they cannot catch up. I mean, they're still struggling to get to their April highs.
That's
with
right.
the S&P at new all-time highs, and you have to think about that.
Yeah.
And of course, why are semiconductors and the Fortune 500 companies doing so well? Cheap money.
Yeah.
Low interest rates, low taxes, and they're really basically, according to Ray Dalio, who just put out this whole article about that, selling a dream as opposed to real profits. So, everybody wakes up from a dream at some point, number one, and what you hope it doesn't turn into a nightmare.
One of the questions I love to think about, we always talk about the pain trade, right? What is there something that's going to catch people off guard? Is there an asset, a movement, something that people are not expecting that could come out of nowhere and sort of surprise people? Energy comes to mind as something that's been so out of favor, that potentially has had a couple days in the last couple weeks where it looks pretty attractive. Is there anything like that, any area of the market where you think people are not paying enough attention to that they should be starting to focus on at this point?
Cannabis.
Cannabis, okay, sure.
Yeah, because I do focus on it.
Okay.
To me, that's another aberration of the market. And we know that from a fundamental standpoint, there are still issues because of the banking issues, state-to-state banking, and the fact is it's not legal throughout the entire United States. But it is still in 33 states legal medically, and I think 19 states recreationally, and that's growing. And yet, if you look at the cannabis stocks and the ETF, which is MJ, so appropriately named, they're in another universe right now. And so I do believe it's a mega trend that's in diapers. And so if it actually had any kind of legislation come out, and it may be after the next presidential election, it seems to be very popular everywhere except within the government. If that switches, I think that would catch people off guard and be a tremendous opportunity for those paying attention.
That's fantastic. That's certainly an area of the market a lot of people are underprepared for, not knowing enough about it. So that's really good guidance. So listen, I know we have to wrap up soon. I know you're presenting today and tomorrow. Can you tell us a little about what you're doing here at the Traders Expo?
Great question. Besides enjoying Vegas and talking to you, well, today I'm doing a breakout session. Essentially, it's called "Everything You Know About the Markets Could Be Wrong," and it's not to scare people, but it's really to make people aware that there is a compass that they can follow, so that they don't get too passive in their investment strategy. Later on at 6 o'clock tonight, I am actually signing my book, Plant Your Money Tree, Guide to Growing Your Wealth. That will be in the exhibit hall, but tomorrow's the big day. I'm teaching a master class along with Jeff Bish and Keith Schneider, who are partners in MarketGauge. And it's the complete swing trading system. So essentially, it is a soup to nuts process from macro to micro, micro to macro, everything that you need to think about and how to actually proceed in making a trade.
That's fantastic, and I know your book just came out earlier this year. Congratulations so much on that. I know I've edited a book, and I know that's a process. So congratulations on that. Well done.
Thank
Where
you.
can our viewers learn more about you and what you're doing?
Well, I'm on Twitter,
Okay.
and that's at Market Minute is my handle.
Okay.
I also have a LinkedIn page. I also have a Facebook page, Mrs. Market Minute Daily. And if they go to the website, marketgauge.com, I write a daily called Mrs. Daily.
Appropriately
Yeah,
named.
exactly. Very creative. And also I have an email address, and that's mish@marketgauge.com. So I'm pretty easy to find if you're looking.
That's perfect. Ms. Schneider, thanks so much for sitting down with us. Real pleasure to hear from you today.
Thank you, Dave. It's been a pleasure for me as well.
Okay, so to finish off the show, here is the 3 in 3, 3 charts in 3 minutes. The first one is the S&P utilities sector, the XLU. So we looked at this earlier when we were doing the market recap, talking about this rotation away from the defensive side of the market, utilities and real estate, which have both been very strong sectors on a price basis for sure, but also on a relative basis through August, September, into the first week in October. Really, we're leading the way higher, and you can see the XLU is actually new relative highs or almost to new relative highs for the last couple of years. That was it. So and so far, we've now rotated down through support, down through the 50-day moving average, and now new relative lows, testing a new 3-month low for the XLU. So that rotation away from defensives and into more offensive side of the markets, particularly financials and technology today, that certainly is a theme to pay attention to. So the XLU and also the XLRE, 2 sectors to certainly pay attention to. The second of the 3 in 3 today is the AAII rankings. We don't look at this chart probably enough, but it did catch my eye today. That it comes out every Thursday. You get an updated number. And this is the American Association of Individual Investors. This is the bar chart at the top, a weekly chart, and then the green bars show you the percent of respondents that said they're bullish on the U.S. equity markets. The bottom is the percent that were bearish, and then at the very bottom I have the spread of the bullish reading to the bearish reading. The reason why this is interesting is we've now eclipsed a 40% bullish reading. This is the strongest it's been since the end of April, beginning of May, which was a previous market top. That was the high coming out of that rally. But if you look, the reason why I think this is not necessarily telling, it's not a sell signal, is that this number can become elevated and stay elevated. So coming out of the lows in December, we got almost to 40% bulls, and then we stayed up in that range for the next, 3 to 4 months. So this may be the beginning of a very bullish phase in sentiment that could extend for a while. Also notice, like at the end of 2017, that number can go way above 40%. We got up to 50% bulls during that stretch back there. I would also point out, looking at the spread, that this is a pretty healthy spread, but again, it can get much further. So if you look back over time, there have been periods when that has actually become a much wider spread between bulls and bears. The third chart of the 3 in 3 is a look at breadth. This is the S&P 500 and the percent of stocks above their 200-day moving average of the S&P, also above their 50-day. What's concerned me about this is less and less stocks above their 50-day. So as the market keeps going to new highs, less S&P names going back above the 50-day moving average. What's interesting here, though, is the percent above the 200-day. My guest yesterday, Willie Delwich from Robert W. Baird, had a similar chart where he was looking at the percent above the 200-day. And we're at that point that is similar to where we've been at previous market tops. That's certainly one to pay attention to going into Friday's session. That is our show for today on the final bar. Thank you all so much for watching. You can get to us on email with any questions or feedback, thefinalbar@stockcharts.com. Also, check out our YouTube channel for all of our previous shows. From Las Vegas, Nevada, this is Dave Keller signing off. Have a great night.